Exponential moving averages, or EMAs, are powerful trading tools. Now, most traders are familiar with the 9 EMA strategies, but they overlook the 20 EMA strategies. Now, if you like the 9 EMA, then the 20 EMA is definitely worth a look. In this video, we'll show you how to trade 2 of the most popular 20 EMA strategies, the 520 crossover and RSI confirmation. All right, let's get to it. The 20 EMA is a diverse indicator that can help analyze trends and determine market entry and exit points. It is calculating by averaging a product's prices over the past 20 periods with the most recent pricing data carrying an extra weight. Now, this weighting is why many traders prefer an EMA to an SMA. It's more responsive to current price action. All right, to trade any EMA strategy, you must first add it to your charts. Here's how for TradingView and MT5. First, TradingView, go up to indicators, just cursor right down to moving average. There's going to be several options, and what you're going to do is click on Exponential. Now, that's going to bring you up with a default of 9 periods. You're going to go ahead and click on your inputs and go ahead and lengthen that out to about 20, and that's going to give you your 20 EMA on TradingView. All right, now the second, to add it to MT5, the second way is relatively straightforward, but it still is a little bit more involved than TradingView. You're going to go to indicators, you're going to go to trend, and then you're going to go right down to moving average. Go ahead and give that a click. Make sure that your method is on exponential, and you're going to go ahead and extend that out to 20 periods as well, and you're going to hit OK, and that's going to be your 20 period EMA. Okay, now we're ready to trade. Okay, let's see if we can execute a trade on the 520 EMA strategy. Now, this is a very short time frame chart. This strategy is built for speed. When the 5 EMA crosses over the 20 EMA, we're going to look to make a trade. Right there, we cross beneath it. You're going to sell the market. When the 5 crosses above the 20, we're going to buy the market. Right here, we have E-mini S&P 500 futures. Right after the FOMC minutes, 15-second chart, and we're going to be looking to go ahead and make a trade as soon as our 5 crosses over our 20, and it looks like that's coming really here any second, in about 5 seconds. We're going to go ahead. We're in position right now. We're going to buy the market. Okay, 4 contracts right there is going to be our entry point. There's the big reversal. Now, where's my stop loss location going to be? For me, I'm going to have it right beneath one of my swing lows. Because this is a 15-second chart, I would have it probably beneath a prominent swing low, although you could definitely bring it up a little bit if you wanted. So right now, what are we looking for out of our profit target? Well, we're either going to go with a fixed risk versus reward based on our stop loss, or we're just going to wait for this strategy to cross back over and potentially get us out of the market. So you'll see right there, we crossed over, and now we're just sort of working. Are we going higher? Are we going to get another crossover? And are we going to be able maybe to get a little bit of a profit right there? There's our bullish break. Pretty darn good trade going our way right now. Now we're sort of wide open. Let's take a look at where our profit target could potentially be. Once again, if we do cross back under it, we're going to exit the trade. But something like this, where we've got a stop loss down there at 58.28, and right there, that's about what our entry points, right around 30. So we're looking for about 2 points, maybe something like 32. That's definitely a doable on a 1-to-1, and we can make it bigger. Okay, right there, bang, we're out. Let's go ahead and close up our trade. You'll notice that right there we got our crossover, and we're officially out of the trade. So was it a bad trade? Well, we bought in right here, and we got out right there. Did we make any money? Not really. But if in fact we wanted to execute this on, say, a 5-minute or a 1-minute or a 30-minute, it's going to give us a little bit better chance at success. So that is a super short time frame trade. Remember, if you get in on the right side of these, they can be very profitable. But if you get into those weave situations with your moving average crossover strategy, you're just going to be in and out, in and out, in and out. Right here, you're going to see that we're looking at going long potentially again. We would have been short. Now we're going long. Do I want to get in or not? Do I want to get in right here on this bar's close? 3, 2, 1. Okay, do we get our crossover? And right there, pretty close. There's our crossover. I'm going to go ahead and send them long again. My stop loss, I could bring up it to this swing low here, or I could leave it down to this swing low, or really anywhere down here I wanted. I would use the prominent swing low and give these trades a chance to work. Okay, we just hit our profit target and we got filled up. You'll notice that our stop losses can be dynamic with these. That's one of the greatest parts about this. But you'll notice our crossover hasn't crossed back over yet. So that was a nice winning trade from that E-mini S&P 500. That's the 520 strategy. Remember, we cross under, we sell the market. We cross over, we buy the market. The 5 is our indicator. 5 crosses under the 20, we sell. 5 crosses over the 20, we buy. And remember, when you get into areas
where you get those real frequent crossovers, it can be very difficult. That's why I recommend probably a longer time frame than a 15-second, but this was great to really show us how the strategy works with a more volatile type of an asset. That's the 520. Okay, let's go over an example of how to trade the 20 EMA with confirmation. Now, we're going to use the relative strength index to confirm exactly what we want to use the 20 EMA for, whether we want to use it to generate a sell signal or a buy signal to get us into the market. So the first thing we have to do is add the RSI to our charts. You just go right down here to relative strength index on trading view, and we should be right there. We're going to go ahead and keep the default settings of 14. What we want to do now is we want to understand how the RSI works, and it's very easy to use. Okay, when the RSI goes up above 70, it means the market's in overbought conditions and we're looking to sell the market. Now, when the RSI goes under 30, we're in oversold territory and we're looking to buy. Now, the 20 EMA is what's going to get us into the market. It's going to help us determine when to sell or when to buy. So in this instance, we've got our market replay function here. You'll notice that we're in overbought territory. That means we're looking to sell the market. So if we're using the 20 EMA to give us that sell signal, I want to see a bar close beneath that 20 EMA. Now, we're using a 4-hour gold chart, spot gold chart. In this example, this is going to be sort of a swing trade. We're going to be looking to get short probably for the immediate future. So in this instance, we're going to go ahead and just roll forward in time and see exactly what we have. We have the market in overbought territory, so we want to sell. Now, right there is going to be your sell signal. Price broke beneath the 20 EMA, closed down there. That's your sell. Now, where would my stop loss be for this? It would probably be right above that swing high. I recommend putting it up there somewhere to really give this thing an opportunity to get in on that bearish trend. Remember, when you're using moving averages, you're looking to get in on trending markets. And when we use confirmation, something like an RSI, we want to give this market time to really reverse course. In a lot of ways, we're kind of looking at picking tops, or at least getting in on the beginning of a new trend. So let's go ahead and roll forward. This is a pretty good swing trading approach, also a day trading approach. If you wanted to use something like this, RSI with the 20 EMA, you could certainly do that on a 30-minute or a 15-minute chart. You could even use a 5-minute chart. Just be sure that you back test your results before you trade it. And right here you can see we got a nice profitable trade. There's our entry. We got a fairly nice move, a little bit longer time frames than we were just dealing with on the 15-second chart, but essentially that's what this strategy is all about. We're looking to get in on a trend. So what do you have here? Overbought territory, we're looking for a sell, and then also on the oversold, when that RSI goes beneath 30, we're looking for a bar close back above that EMA, and that would be our long trade. So there's how to trade the 20 EMA with an RSI confirmation. That's a very simple example. Remember, you can adapt these to any time frame or any market. Just do a little back testing first before you get in there and begin trading.
Now, EMAs are among the best moving averages for active traders. They're responsive to recent price action, thus they keep our analysis current. Now, it's no wonder that the 9 EMA and the 20 EMA strategies are so popular. They offer us a way to trade any market on any time frame. Think of EMAs as your Swiss Army knife. Select the right tool and then go to work. Now remember that no EMA is a holy grail. That's why we use filters such as crossovers or RSI. They help us harness the power of the EMA without compromising its intention. Mix in some solid risk management principles and you have a viable way to trade any market. Put your stops down, your targets up, and your leverage in check. Then you win. Now that's all for now. We'll catch you on the next one.